I'm going to start off. You're saying you can see, so I'm just going to show my screen there. Okay, this. You can see that, right, guys? You can see the screen. Where is the? Okay, good. All right. So let's just start off real quick. I'm not going to really spend any time on talking about me because, quite frankly, I'm sure that you guys don't really care. What you're really here for is to get some information, and so that's what I'm going to cover with you guys today. So here is the disclaimer. Of course, just keep it simple. You know, there's risk to trading. Be intelligent. Be smart. Don't risk money you can't trade. Of course, you know, just kind of simple things that you want to keep on the forefront there, okay? So what I'm going to cover today is swing trading at location. And I think that for those of you who are swing traders, I think you're going to find this really valuable. And if you are considering swing trading, then this might be what might put you over the edge to go ahead and want to do it. So we are both day and swing traders. I definitely, of course, Fabio has spoken here before, my trading and business partner. He is definitely more of the early morning day trader. I absolutely do a heck of a lot more of the longer term day trades and swing trades, but we're going to go ahead and talk about swing trading at location. And I just wanted to say, I heard briefly just at the very end of the last speaker's talk, Simon, and definitely an intelligent guy, and some of the things that he mentioned, you may hear again with me, because it sounds like he has a very keen interest and understanding of supply and demand, as do me and Fabio here at Fierce Trading. What I'm going to try to do, though, is take it really kind of make it simple and make it into a workable plan for swing trading. So here's my outcome for today. Okay, so my outcome for today is that I want to help each and every one of you build a plan to capture a 1 day to up to a few weeks profit move from trades that originate at relevant support and resistance with defined entries and stops and robust profit targets and zones. Okay, so that's kind of what the outcome is for today. Now, before I get into it, I wanted to just, because as traders we're visual, I want you to see kind of what it is that I'm talking about. And everything I'm going to be showing you today on the charts are equities, you know, actual stocks. So I thought I'd visually kind of capture this outcome in a chart, and then we'll go from there. So this just happens to be, and everything that I'm going to show you is either a trade that I have taken or a trade that's come right from one of our traders at Fierce Trading. But I believe all of the ones that I've shown today are of trades that I've taken. So this was IBM. This was early, mid-November, as you can see here, November 15th, 16th, what have you. So IBM was doing this nice little pullback right into some prior relevant support that had an imbalance of price demand. Last time price was here, it went all the way to here. So as it comes back into that area, I am going to be looking to go long. And I'm actually going to walk you through a really simple 3-question process to have you be able to do this without having useless indicators up or spending a lot of time at night or on the weekends. Just something that you can do really, really quick to identify if you're at a really good location on the chart. And so this was a prior relevant support area, had the prior imbalance of demand, so we decided to just take it over the 148 price, over the open of that red candle. And you can see, boom, there's the entry day, immediately moves in our favor. Now, of course, there's going to be a few areas along the way on a deeper pullback like this where it's going to do a little bit of a pause. So in here, where those traders that bought didn't have a chance to, or maybe didn't use their stop, so they're going to exit out. And then, of course, there's going to be another little pause area at the bottom of this. And here, as you can see, it did a little pullback before it got bought. Ultimately, the final target, which reached in 11 days, was here, where we would expect to get, you know, a pullback at that resistance and supply area. So let's continue. Let me show you exactly what we're going to cover today, which is this. I'm going to help you guys identify relevant support and resistance price zones. I'm going to help you determine the imbalance of demand and supply at those areas and how that affects price, and how you can use that information to capture fast moves And then like I said, I'm going to walk you through a very simple and effective 3 questions that you can ask yourself and then answer to start to devise your trading plan and your edge for these short-term swing trades. And then lastly, I'm going to show you lots of chart examples, and then we'll have a few minutes for questions and answers. How's that sound? Good? And I see some people here that I recognize, so thanks for some of the folks that I recognize. All right. So short-term swing trading, who is it kind of suited for real quick? Well, somebody that may not be available to day trade, or somebody that day trades, but they want to add short-term swing trading to their arsenal or to their trading plan. Likes to know if a trade is likely to work within the first 1 to 3 days after they enter the trade, which is really important because I don't like to take full losses on my initial trade entry. So I always obviously have a entry and a stop and a target, but I try to, whenever possible, utilizing this 1 to 3 day rule to not suffer full losses. I like to, if the trade's not going to work, I like to identify quickly. Probably means that I bought it at the wrong location, or just other significant traders are not seeing what I'm seeing, so I can just exit out for a small gain, a small loss, or break even, and then just replay it at a better location. And I'm going to show you an example of that later on an earlier trade this month. And then lastly, well, second to last, any trader who likes to profit quickly on winning trades, which kind of goes back to that first point, the point right above it, because that first candle upon entry, or for sure within the first 3 days, is going to tell you a lot about if the trade is likely going to work and can get you at least safe, get you profitable, let you take some or piece of the trade off to lock in some profit as you attempt to get the bigger move to the next resistance or supply area. And then somebody that likes to lose less than originally intended on losing trades, like I mentioned. So that's what I believe, people that fall into any of these categories or all of them, I think will benefit most from this. Okay, so let's get to relevant support and resistance. So support, just marked by the S, and resistance marked by the R, is found at location areas. It's not a specific price. It's not an exact line. It's an area. And it's not some type of moving average or some other lagging indicator. Now, sometimes lagging indicators may line up with real support or resistance and can be used as a guide, especially as somebody is starting out or maybe has learned that way from some older traditional education, and they need to have the moving averages. They maybe got a little bit of a crutch to it, or they've become so used to having them up that you can use them as a guide. But moving averages, other lagging indicators, are not real support and resistance. Sometimes it'll match up that way, but the best way is to focus on price, and that'll keep you in front of the best opportunities for sure. So next is the most effective way truly to determine if an area is strong and has relevant support is to look to see how price left that area the last time it was there. Did it move away really fast, or was it gradual? And I just wanted to make one note. So everything, if I'm talking about support, it would be the same thing as if I'm talking about resistance. It's just easier for a presentation of this length to just speak in one direction. So I'm mostly going to be talking about buying at support, especially also since we've been in such an uptrend on most everything that buying pullbacks has definitely been the most profitable venture out there. But you just flip everything around. So sometimes I don't put resistance, I'm talking about relative support here, but it's the same thing, just reverse the thing if you're looking to short something at a resistance or supply area. Okay, so that's really truly the most effective and simplest way to determine if an area is strong support. Just look to see how quickly it moved away from that price zone the last time it was there. Did it move away really fast, or was it gradual? If it moved away really fast, pretty good indication that that was really good demand and has a pretty high probability of moving fast away from that area again. If it was gradual, then maybe not quite as high a quality of a trade from a probability perspective, because maybe there was some tug and pull between demand and supply in there. We want the ones that are going to likely move very quickly. Okay, so let's look at a couple of examples. So this was GM. This was a recent trade. It's actually also set up again just a couple of days ago as well. But this is GM, as you can see here, the daily chart. So here we had this professional kind of significant gap that actually kind of did it again. We had one here, and then we based out for 5 days, and we gapped up again. And then you can see how this thing just basically opened up, and you can see how much demand there was. This price just moved quickly away from $41. I mean, it only took like 6-10 days to get all the way up to $45, which for GM is quite a big move, since it only averages about 85 cents range a day. And so here we go. A couple of weeks later, 3-4 weeks later, it starts to pull back to the same area. Is this relative support? Well, the last time price was here, it moves quickly away. Does a nice multi-week pullback right to that same area. It's in our buy zone. Now you just have to find your particular way to get in. If it pulls back into this area, then we'll look to go long. And I'll show you the trade. Boom, off you go. Now, why would it stop here? I'm not going to be able to get into in great detail why target would be here and not up here, but basically you can imagine that, and I'm going to speak a little bit about it at the later slides, but you can imagine that there are a bunch of people up in here, mostly novice traders, that bought the breakout. That's what most people are taught is, like, imagine, the people that bought on that day, they don't recognize this, basis, they buy this and then they don't stop out. So they're just like, they're in pain this entire way. They trade to be right, not to make money. They get their ego in the way. And so the time it comes all the way back up into this base, just imagine that anybody that bought up in here that didn't stop themselves out, just going to naturally want to exit out of their position. So, maybe they can tell their wife that they didn't lose on a trade or they only lost a little bit while they were, gripping the entire time that it had gone so far against them. So obviously it's a couple of points it's going to stop along the way. I'm going to talk a little bit about this later too, about the fluid pullback. But of course, the top of this pivot here is where we're going to get some type of little pause, a little bit of supply comes in, comes right back into that demand area, and then just continues on nice and easily right up to this area. Now, why would that pivot area not be all that relevant after it's done this little 2-bar pullback? Because the primary direction of the stock is long. This professional gap with the demand suggests that the stock is going to go higher from a probability standpoint. This little 2-bar pullback are just either novice short traders that are trading against a really strong stock at a demand area, or some folks that had bought in here, didn't stop out and need to get out. A couple of days gives them that opportunity, and then the big money just drives it right back up to the bigger price void target. Questions on it? Make sense? All right, good. So let's talk about this price imbalance. There are 3 key points to evaluate demand and supply, especially with specific to short-term swing trading, and we also obviously use the same kind of concept intraday as well. But there's always 3 things I'm always asking myself, or 3 areas that I want to evaluate or consider really quickly. One is the stock in play, and so one way that I determine that is if it had some recent significant pro gap. So obviously during earnings season, you tend to get really significant gaps after a company has announced. So all of the news is in the price, doesn't really even make a difference what the earnings report was. All of that stuff is factored into the price. And so it pretty much indicates if a stock is in play. If a stock had a recent wide range bar, something that opened at the low, closed near the high with greater than average volume, especially if it originated from a demand area, that's something that is likely a stock that's in play. Pullbacks into that wide range bar are obviously going to continue to get bought by the folks that created the wide range bar. So that's another example. And then the next thing you want to consider is what's the primary trend of the stock? I mean, if the primary trend, which most things are these days, is up, pullbacks into prior support that have really good demand, the path of least resistance is not to capture this little move and try to be a hero, but to buy the pullback and capture the big move. I always like to say, don't trip on pennies on your way to fortunes, right? That would make no sense. So don't be trying to pick the top trader, just buy these pullbacks on strong stocks. Okay. And then lastly, how did the pullback occur to that relevant support area? So was it a nice 3-bar pullback that doesn't have any overlapping candles, that's going to be a much easier move out versus something that is crisscrossing along a way. That means it's going to be like on that IBM, there's going to be areas along the way where folks got themselves trapped, didn't stop out. And so as it comes back into those areas, traders going to have to exit, let them out before it continues in the primary direction. So the more fluid the pullback, the easier and faster that you will get stocks that will move quickly into a target, to your intended target area. So let's talk about this red hat trade. This was earnings season. This was late September. I really should have been back at school, but I wasn't, so I was focusing here on red hat. Red hat had this nice professional gap. Now I can't really get into exactly what we characterize a professional gap as because I only have 45 minutes total and that time is dwindling down. But this is a professional gap. It had big volume, as you can see how it closed the end of the day. The yellow line is average volume. This thing had significantly greater than average volume. And it gapped over this consolidation with really just this massive price void to the left. I mean, nothing to the left for tens or 20s of dollars. So this thing had a pro gap with big volume, over consolidation, an uptrending stock. And then it just did the little 2-day declining volume pause, tiny little pullback. And so once that did that, the next candle opened up inside of it. We said we're going to go long above the gap day open with a, don't need to have a big stop at this point because these two candles has shown that there's no more supply, and this thing just off you go. And this thing did a, it was like a $12 move in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days at a $12 move with less than a $2 stop. So very huge risk to reward. A lot of concepts in here, but that's an example of a stock that's in play that had price imbalance, that had a void, that had novice sellers coming in here, and with an imbalance of more buyers than there were sellers, and boom, this thing just takes off. There you go, off to the races. So let's continue on this price imbalance. So as I mentioned earlier, how did the stock move from that price area the last time it was there? Very important question to ask. Was there more demand than there was supply? Did it move quickly away? And did it do it with strong commitment? Did it do it with big wide range candles? Did it do it with increased volume? That's going to suggest that really big money made the move. And so unfortunately, we're not big money. Even if you are trading 5,000 shares on Disney, we're not big money. We're just a little blip. So what we want to do is just hook our anchor onto big money at places that they've bought before and likely will buy again. Now, will they buy there again? Don't know. But we have to trade rules, not exceptions. We have to make the reasonable assumption from a probability standpoint that if an institution has put a stock in play, anytime it comes back into a prior area where they bought heavily, they're going to do it again. Because just by default, big mutual funds and institutions can't just buy everything, all of the shares they want in one day. They have to leg into that position over a series of weeks or months. So if we know that, then we can be ready as it pulls back into those areas. So if then it pulls back into that area, we want to buy, if so, then that is the area we want to buy the next time it comes to that price zone. So let me show you an example. This was 3 trades on Disney. So Disney, as you can see here, so let me get my little pointer out, had a nice pro gap after it had this committed move. So here was this move that went, basically kind of came out of nowhere, went from 98 all the way up into this, basically this 104 area, pull back, then the next day it gaps up. Now it gaps up a little too far. I mean, all you have to do is just ask yourself the question. If you were one of the big institutions that decided that you're going to have a longer term position on Disney, and you created this move from here to here, and then it gaps up to here, you don't really have that much of an incentive to add more shares in here. Institutions are designed to get the best possible price, better than average price. So it does this pullback right into the area where it had taken off before. Last time price was here, ran up almost $5, almost $4 there. And then as you can see, it starts to slow with declining volume, meaning that there's no sellers left at a demand area. When you have no more sellers left at a demand area, you pretty much can expect from a probability standpoint that this thing's going to move quickly out of here. And there it was. This was the day that we triggered in long. And you can see the very first day and then the second day totally got us right to the first target here. Now, why would it pause there? Why would it pause there? Is this a strong resistance area? No, this is just a little annoyance of breakout traders that need to exit out of their losing position because they held it throughout this whole entire time. 2-day rip up into there, pause, that's target one, and it just does this little pause, this little pullback. Now it's also going to attract in some novice traders there that are going to try to stock short a really strong stock in a demand area, and then the next day, whoop, just runs right up. So it goes from basically 103 to 112 in a matter of 5 days. Now, obviously, we don't want to be the folks that buy way up here. I mean, that would be terrible. So what we want to do is just wait for this thing to pull back into an area where price had taken off before, either into here or into here. So let's just wait and be patient and see if it does that. And 4 days later, how about that? Pulls right back into the same exact area where price had gone from 104 to 112 in 2 days. Now, you don't have to really overthink this stuff. You just have to understand that trading is a probability game. If you have a specific game plan and you have the emotional maturity to follow it, then you take these trades when they come into your buy zone. Whether it works or not is completely irrelevant. It's training your brain to say, if I don't take this trade, it's like, oh my goodness, like I'd rather take this trade and have it not work than not take the trade because I overanalyzed a bunch of indicators that don't really amount to anything. So it pulls right back in, and look at the nice fluid pullback. This 4-bar pullback starts to slow down as it comes into that demand area. So the folks in these last 2 candles, novice sellers at demand. Entry candle stop, nice defined stop, and should move out of there unless it doesn't, but I'm going to take a shot at it. Whee! There it goes, right up into 112, which was the final target. Moves quickly away. Nick, I'll come back to that question. I don't know if there's anybody that can flag it for me, but I will come back to that question, okay? And there it is, off to the races. So first trade, pull back. Second trade, boom. And remember, novice traders are always the ones that are buying up in here, and up in here. They're always waiting for the breakout to happen rather than buying it with the same folks that just bought it before and just being part of that. Just hook your little anchor on to the 18-wheeler, cruising down the highway and jump right on them. All right, so remember I told you I was gonna just give you a simple 3 questions because I like to keep things simple. I mean, I'm not, I've seen people overcomplicate their trading. I mean, back in the day when I used to do a lot more one-on-one coaching, I mean, people would start off with me and they would send me their charts and there'd be so many lines and stuff on it that I wouldn't even know where to begin. There would be just, every single indicator on the planet and be so many lines and areas that I honestly wouldn't even know where to start. It was like a big convolute. It looked like almost like a child in romper room that was given a couple of crayons and they were just scribbling on a piece of paper, trying to smart their way into beating a market that's not beatable. It's random approach to a random market. The best way to beat a random market is just to have a simple plan that you can execute over and over and over and over and over again, like a boring little robot. So there's 3 simple questions that I'm going to go over with you right now that you can answer to help build your plan and your edge. And by the way, all of the trades that I've shown you and all the ones I'm going to show you all just came down to these 3 simple questions. Just keep it simple. Is the chart that you're looking at either on the daily or weekly, and sometimes you have to look at both, and I'm going to show you that, is the chart broken or is it damaged with this current pullback that's happening in the stock? Now, some people might be like, what do you mean by damaged or broken? What I mean is that if you have a stock that's in an uptrend and you have a stock that's pulling back, is this pullback damaging the overall trend of the stock? Typically, when a stock gets damaged or broken, it's when it has some type of significant gap down that kind of gaps through multiple pivots, traps a lot of people are wounded, and you're going to get this little burst down as people are exiting out in mad areas because they bought here, and then it gaps down well below their price point or below a pivot or consolidation. But just normal pullbacks on strong stocks does not make the chart damage. We're going to go over plenty of examples of that. So that's the first question. Is the chart broken or damaged with this current pullback in the stock? Yeah, I sometimes will go to the monthly chart, John, but necessarily most of the time I don't need to, because you know, these quick 1 to 12 day moves, usually the weekly will do it, but if I need to, I will go to the monthly for sure. Okay, the second question. Is this area where it's pulling back to, is this where committed money moved the stock the last time it was there? And did it move it fast? Like in that Disney example, at 104, it went to 112 in like 3 days, does a 4-bar pullback to near 104. It moved, the last time it was there, it moved really, really, really fast. Like there was like people were tripping on themselves to buy it. Pulls back in that area, likely a pretty good demand area, and you want to start finding your way into that particular stock. And then the third question is this where novice retail traders, now what I mean by that, and I don't mean to offend anybody by that, because at one time I was a novice retail trader, but novice retail traders are the, you know, the 80 to 85% of traders that really don't make any money. They're always buying at the wrong locations, shorting at the wrong locations. They're always putting their stops, so they should be buying, putting their, you know, they're buying breakouts and then seeing the stock come back $3-4 against them, stopping out, and that's where they actually should be going long. Traders that just trade random, right? They try to be right rather than make money. They try to sit there and analyze a chart and put up indicators that support their bias. Those are what I mean by novice retail traders. So the question that you want to ask is this really where a novice retail trader would likely buy? And so I'm going to go through what the answers are to these questions that you want to get. So let's continue. So the answers to these questions must be like a definitive no or yes. And there's a certain sequence in which to do it, and I'm going to go over those with you really quickly. So the first question, which was, is this pullback damaged or broken the overall trend of the chart? You want an unequivocal, fast answer, no. The next question, which is, the last time price was in this zone, did it move quickly away? Yes. Third question, is this really where a novice retail trader would be like, man, if I could buy Disney on that 4-day pullback to 104 and buy it on its 4th down day, would that really be where they would buy? No. No, yes, no. Can't make it any simpler than this. But here's the thing. You cannot impose your beliefs on what you want it to do. You can't impose your beliefs. You can't be like, well, my brother-in-law works for this company, or I used to work for that company, or, you know, I have, you know, that product and I really like that company. And so I believe it's going to go higher, and that's really what I wanted to do. So I'm going to tilt my head, or, you know, say no when it's really yes, or say yes when it's really no. Does that make sense? They have to be definitive. Now I'm going to go through a whole bunch of charts to show you just how quickly you can determine if these answers are quickly no, yes, no. And it's simple. How many people can answer 3 simple questions? No, yes, no. No, yes, no. No, yes, no. It can't be any easier than that. Okay. So this was HUN. This was back in middle of November. This was actually brought to my attention from one of our traders. His name is Joe. Actually just started trading like within the last 10 months, just kind of picked it up really quick. So we're going to answer these questions. Is this pullback right here in HUN, this couple of week pullback, does this damage the chart in any way? Has this like broken the chart? Is this like, you know, my goodness, like this chart is completely damaged? No, absolutely no. Easy. Next question. Is the area that it's pulling back to? Now, and sometimes you're going to see it here, or you're watching it and then somebody brings your attention, shows like, hey, AE, is it pulling back? You know, is HUN coming into a buy area? Well, let's look. The last time price was here, we had this explosive move, this 5-day little base, and then off you go, runs to $32. And it does it in 1, 2, 3, 4, 5, 6, 7 days. $3 move on a $29 stock, that's over 10% in 5-6 days. So yes, that was. No, the chart's not broken. Yes, that's where price moved quickly before. And then the last question, are there a whole bunch of retail traders, you know, the ones that have their charts loaded up with indicators and lose money all the time and trade randomly and go into chat rooms and talk about some home run trade that they may have, just taken? How do I go back on this thing? There we go. And would they be like, man, if I can just get into HUN on a trigger over here and use the entry bar as a stop? No, absolutely they're not. Most novice retail traders are not going to do that. No, yes, no. You want to find your way in. So what we said is that if it triggers 1 penny over the opening of that candle, we'll use the entry candle as a stop. And this thing, from a probability standpoint, should move pretty quickly away from here again. And there it was. There's the day of the entry. Off you go. Entry, stop. It's going to pause here to let some of those folks out that bought here and didn't stop themselves out. Why do people not stop themselves out? I don't know. They must not like money. I'm just not sure, but we don't need to know why they don't. They just don't. And then it just does the little 2-day pullback and then off to the next big target. Make sense? All right, let's continue on. Do a couple of more no, yes, no's. Here was Sticks. Well, it's STX. I just call it Sticks. But Sticks had this nice, significant professional gap. But quite honestly, gap just a little bit too far. You can see this thing had a pretty damaging gap here. So it just kind of had to transfer all of the supply and demand. Really didn't have a whole lot of supply, couldn't go any lower. Finally, all of the supply and sellers gave up and this thing gaps up, but it gaps up into an area where some of these folks that may have bought in this area that were stuck as it gapped down, they finally, after months and months and months and months and months, get an opportunity to get their money back. So it gaps up. And so we're waiting for this one to pull back, to just pull back. And we wanted it to pull back to the area where price had taken off before, which was, you know, anywhere around 35, 36. Whole institutions like whole numbers. So you have to assess as it comes down close into those areas. Again, their area is not an exact price, like has to come exactly to $35.20. No, it's just kind of in this area. So it does this multi-move pullback, does the first attempt to go higher, gives the slightly higher low. We said if it opens up inside this candle and trades right above here, we'll use the entry candle as a stop, and it should move itself out of here pretty quickly. Why? Because it did. Oh, let's answer the questions. I apologize. Let's answer the questions. Did this pullback right here damage the chart? Is it like broken? No. The last time price was here, the last time price was at 36, did it move really quickly away? Heck yeah. I mean, remember, it didn't close here and open here. Like Jack didn't just take some beanstalks and plant the price to open here, right? It actually got bought from here to here in the pre and post market. Right? It wasn't Jack just planting his beanstalks up there. So there was lots of demand to get the price from here to here. Pulls back into that area. Did price move quickly away from that area? Yes. No, yes. And then the last question, would really a retail trader, like, you know, the one fumbling around trying to figure it all out, would he be like, man, if I can just buy it right here over this higher low at demand area? By the way, these sellers right in here, just novice sellers are selling at demand. They're not selling at supply, they're selling at demand. Would people buy there? No. No, yes, no. Look for your way in. We said if we buy it 1 penny over that, we use the entry candle as a stop, and it should move quickly away out of there unless it doesn't. Look at the first candle. I mean, remember I talked about the first candle tells a lot. It tells a lot. Like, yeah, there was the demand. We were part of that. We got it right there. Bases out, let some of these folks out that bought at the gap day low and they didn't stop out. Pauses, no more supply, runs right up to the next target. Nice, easy trade. Questions on that one? Nice and simple, right? How do we know if it wasn't going to fill the gap completely? Don't know. I mean, I think Simon said it earlier, no clue, but you don't need to know. All you need to know is that you're in an area. If you take, I'm telling you, if you just take 20, if you have a plan that's definable and simple and easy to follow and you do it 20 times, it's possible to lose money unless you do. But it's not the edge, it's the trader messing it up, you know, trying to pick and choose which trades they think are going to work better than others, right? Risking more on some than they are on others, not selling at targets. I mean, there's a variety of reasons why 10 people can take this trade and, you know, some make some money and some don't, right? You just don't know. And here's the great thing too, Deborah, there's no point in spending the next 5 to 10 years of your life trying to figure it all out, because you never will. It's just much easier to just have a simple plan and then just make money and then go and enjoy the things that you normally, the time that you normally spend doing that stuff, go and enjoy the things in your life that you really want to do. All right, here's one, QRVO. QRVO, and this was brought up by one of our other experienced traders. Now, when he brought this up, he says, hey, you know, QRVO is pulling back into an area of prior support with demand. And I was like, you know, I looked at this daily chart and I'm like, you know, I don't know, maybe, you know, looks a little bit, you know, of a deeper pullback. So let's just go to the weekly chart. Maybe that'll help clear things up. Oh, there we go. Wow, that weekly chart clears things up quite a bit. This nice, you know, traded all the way up, doing this nice 3-week pullback right to an area. Right, so now this weekly chart, not damaged. No. Did price move quickly away from here? Yes. Would a retail trader in this daily chart right here look to, on this day, say, man, if I can just go long here, whoop, my bad. If I can just go long right here, that's going to be really awesome. No, no, yes, no. So this one opened up. Now, oftentimes they'll do that, and it triggered, it just sold off first thing in the morning, like into almost like 10 o'clock. And as it trades right back above that red, we entered in, and you know, here we are, day 2. It's going to pause a little bit here because there were some folks that bought here that didn't stop themselves out. Why? No clue. They just don't. Maybe they don't like money or something. So they're hoping that it comes back, right? And they're either going to exit out and do a little pullback, or they'll just say, you know, whatever, I'm just going to stay in because I wasn't down all that much. And then we should come up to the next area, 70 and so forth along the way. So we'll see. It may not do that. It may tomorrow open up and engulf this candle. And if it does, there's no possible way at this point now I would lose a full amount in the trade. So I don't have to be right. Like, I'm not going to take the trade here on this day in the tail with an original stop here, and now it's gone almost $2 in my favor. Then I'm going to let it come all the way back down in here, right? Worst case is that'll make a little bit of money. And if it comes in and gives a higher low and doesn't create a new low, then I can always just replay it. Okay. Here was Intel, and this is one that actually we got out for a very tiny loss. It was like a 25-cent loss per share, and then replayed it. So here was Intel had this really great, significant professional gap right here back in late October. It was an earnings gap, ran up, and then it just pulled down into this area where we went long. And it just, you can see how it just doesn't, the first 2 candles, to just putter along. It's like, man, no, where's the demand? Like, where's the demand? Like, that's just crazy that my 2,000 shares didn't hold this thing up. Like, I'm the only one must be loving the stock at this moment. So the next day it opened up here and it started to sell off, and I just exited out for a tiny loss rather than taking the full loss. Because I can always just replay it. I don't need to be right. I just want to make money. And so a couple of weeks later, it was like about almost 2 weeks later, this was the day that we trailed out, pulls back in right to the next little area, right to the basically the bottom of that gap day. And then you can see at that location, supply just completely drying up. Nobody left to sell at demand. Isn't that interesting? Because real big money and pros don't sell at demand. They buy at demand. So after this happened, we said, hey, we have an opportunity. Since we only lost a little teeny bit on the first trade, rather than taking the full stop, we're available for the next one. So we'll play it if it opens up, and we'll see if it can move away quickly this time. Don't know if it will, but maybe it will. Whoop, 2 days, whee. And actually, I think it traded close to 47 today. So That's the candle that I want to see right there. There's the demand. Thank you. But by not taking a $500 loss here and took 100, I'm available now to take this trade without fear, without wondering if that one's going to work. You just got to keep taking them if it matches your plan, and boop, off and away it goes. Off and away it goes. Here's Twitter. Let's answer this one. This one is, Twitter is now actually has traded on up. I'm going to show you a couple of things here on Twitter. All right, so I'm going to go through quickly this one. Here was Twitter, had that significant gap, ran up, then it just pulled right back. Is this pullback damaging the chart? No. Is it where price took off before? I mean, yeah. I mean, last time it took off, it ran like over 10%. Would a retail trader buy right here over that candle? No. No, yes, no. Let's go long. Boom. Look how fast it moves away. Now, this is where most novice retail traders buy. They don't buy here. They're afraid to buy here. They're like, I need confirmation, so I'm going to buy it at a close above here. So they buy here as we're exiting out of the trade, and it pulls back out, and they stop themselves, and they stop out right where that next higher low demand is. And as they're exiting out of their losing trade, we're just going right back in above the red candle. Whoop, right back up. Now, would this act as a significant area of resistance right here? No. The stock has completely done its turn with this gap. This is all committed buyers in here. This pullback was just letting some folks out. As it comes back up and tests it again, very little. Anyone that's left gets out. Novice shorts come in, shorting at demand, and boom, it rips up higher, okay? So the next question I always get is, how do people find these? So there's two ways. Obviously, you want to hang around with people that trade like you. So, you know, if you like any of the moderators or the people that gave talks here today, and you're like, man, that guy really resonated with me. That woman was like really awesome. Like, I totally get that. Then you want to go hang around with those people, right? Because the traders that they trade with probably trade the same way. Everybody at Fierce Trading trades the same way. We find swing trades, we all ask no, yes, no, no, yes, no. We're like little robots. So that's one way to do it, is to hang around. So when Joe or Jonathan say, hey, what about Hun or Sticks or QRVO or GM? And I didn't look at that one, boom, absolutely, we can participate in it with them. So that's one way to do it. The other way is you can get a scanner. Now, Fabio, he's kind of like a scanner geek, not me, you know, but he set it up, as you can see right here. He has a bunch of scanners, but he has one called Swing Scan, and he's written code to identify the pullbacks that we want, things that are pulling right back to a prior area where price had moved quickly, multi-day pullback. When those show up, we know that the ones that come across our scanner are going to be more than likely high quality ones. So you can definitely do that as well. And then I can take some questions. What I'm going to do, we don't really have any like offer per se, but there is, I just Fabio thought that I could just quickly share with you our site in case you're interested. So fiercetrading.com. If you want to know things about us, you can go into products. You can see we have the trading room, Income Trader Live, which is something that I do every day, Monday through Thursday from 12 to 1, where we just go out and hunt for swing trades and talk about locations where there's likely that imbalance of demand and supply. Then we have our alert service, that swing trade alert service, and we have an afternoon alert service. And then we can, you know, we have like a bundle here where you can get all of them probably for a little bit of discount. Oh, I'm already signed in, logged in, but you can go to fiercetrading.com and play and go around if you want. If you want to see who we are, if you want to put a name to a face, there's Fabio's got the best dome in the biz, and then there's me. Probably gonna update that. It's maybe like 3 years old. I don't want to be like the realtor that has his card from the 70s, you know. But in any event, all right. That is that. Any questions? Let's see. There was a couple of questions. Do I draw trend lines also with support? I don't draw trend lines. Kind of visually see that, John. So I think as, you know, a way as you're starting out, using a trend line would absolutely be okay. But you just don't, the fewer lines that you can have on your chart, I think is better. So one of the ways that I kind of got rid of my addiction to indicators and lines and moving averages is that I would put the chart up, the daily chart, then I would actually draw in the 20, the 50, the 100, and the 200 where I think that they would be. And then I would go and actually put them in. And I started to realize that I didn't need to actually see the moving averages to know where those indicators likely were. And so that's one way that you can probably kind of do that.